Breaking news. President Trump has just signed an executive order that could change how millions of Americans invest for retirement forever. For the first time in history, 401 retirement accounts can now include cryptocurrencies, private equity, and other alternative investments. For some, it's the dawn of a new financial era. For others, it's a dangerous gamble with people's futures. So, will this decision create a new generation of wealthy retirees or a wave of financial disasters? Tonight, we uncover the facts, the fears, and the fury behind this historic move. They're calling it the retirement revolution. But revolutions come with chaos. Supporters say this opens the floodgates to wealth-building opportunities once reserved for Wall Street's elite. Critics warn it's like giving a high-voltage power tool to someone who's never used one. Yes, it can build, but it can also destroy. On August 7th, 2025, President Trump signed an order allowing 401 plans, which hold roughly $8 trillion in savings for nearly 90 million Americans, to invest in alternative assets like Bitcoin, Ethereum, private equity funds, and even private credit ETFs. Until now, strict regulations kept these retirement accounts in relatively safe liquid assets. Think stocks, bonds, and index funds. But this changes everything. Advocates believe this could democratize access to high-growth sectors. Critics, they fear retirees' life savings could be thrown into high-risk, volatile markets with little protection. This is more than just finance. It's politics, ideology, and trust. Side 1. Proponents argue that for decades, the average American was locked out of the most profitable opportunities: venture capital, private companies, and early-stage tech. Wall Street insiders got rich. Main Street missed out. This, they say, is about leveling the playing field. Side 2. Critics warn that alternative assets are volatile, opaque, and often illiquid. You can't just sell a private equity stake overnight. Fees can eat into returns. And the emotional swings? Imagine watching your retirement fund drop 30% in a week because Bitcoin had a bad run. Senator Elizabeth Warren slammed the move, calling it a reckless invitation for financial catastrophe. Meanwhile, crypto champions like Michael Saylor are celebrating, saying, "This is the moment America joins the future of money." Let's put this in real terms. Imagine you're 45 years old with $200,000 in your 401 gate. Under the old rules, you might earn a modest 8% per year. With access to crypto and private equity, your potential gains could be much higher, maybe double-digit growth. But here's the flip side. That same portfolio could also lose 40% in a bad year. That's the gamble. The question isn't just, can I make more money? It's, can I stomach the risk? Because with higher potential comes higher volatility. And volatility doesn't care about your retirement date. This executive order is about more than retirement plans. It's part of a bigger trend. Deregulation and the blurring lines between everyday investors and institutional ones. For some, it's financial freedom. For others, it's the erosion of safety nets built over decades. And make no mistake, other countries are watching. If this experiment works in the US, we could see similar moves in Europe, Asia, and beyond. If it fails, it could be a cautionary tale for generations. The Department of Labor will now have to issue guidelines. Retirement fund managers will need to decide if they'll offer these new options. And you, yes, will have to decide whether to stick with the old, safer path, or embrace the high-risk, high-reward frontier. We're at the edge of a financial turning point. One decision made this week could shape the financial futures of millions. Is this the bold step toward greater wealth for all, or the spark that ignites the next retirement crisis? Tell me in the comments, would you put your retirement savings into crypto or private equity? Or is this just too risky to touch? Stay informed, stay sharp, and remember, your money tells the story of your future. Make sure it's a story worth telling.